Sensex is 0.8% in the green.
TPG Capital is looking to sell close to 1,000 crores worth of stake in the company. That comes to around 1.9% of the total shareholding.
The government is not having any plans to change the December 16 deadline in terms of receiving the expressions of interest for IDBI Bank privatization.
Kotak has written a note on NMDC and they've upgraded the stock to buy with a target price of 130 rupees.
Not a bad opening at all. The Nifty is up 40 points.
It would be fair to assume that Fed is trying to buy credibility. They have been behind inflation for a long period of time.
In many ways, the Fed is well served by feeding that hawkish narrative into the market.
The Nifty slipped about 130 points from the day's high. We're down 0.5% on the benchmark indices.
67% of our revenue is application-centric.
The principal extension of tenure up to 10 years, now this is an established thing for the TSB. For the nationalized banks at least, it can become a precedent, so to speak.
After yesterday's block deal, close to 13% stake, they continue to hold around 4,400 crore worth of stake as far as Paytm is concerned.
Now the other brothers from the Haldiram family are now merging their operations to create one snacking behemoth that will then file for a mega IPO.
Overall, you'd have to say it's range-bound with a negative bias at this point in time.
All right, so this is the last 60 minutes of the day and the week. You're with us here on Closing Bell. I'm Prashant. With me in the studios, Rima, on the newsroom floor, Nigel. Guys, hi. Good afternoon. And, you know, it's not quiet. I mean, it's lower. You know, yesterday it was quiet. Day before yesterday, around 2:30, not very much was happening. It's been that way. But today it's more, I wouldn't say decisively down, but it's more down than what we've seen recently. Mid-caps and small caps are a bit more under pressure. So, you got almost a 1% cut in the mid-cap index, the small-cap index. You know, advanced decline, naturally, there is 2:1 in favor of declines. We started exactly in the opposite direction. 3:1 advances to declines in the morning when we started, but it's all flipped. Defense names are seeing some profit booking, and you're seeing this, right? Individual, well-liked, well-owned, HNI-focused, retail-focused names, liquid names correcting from the mid-cap space, and defense comes top of the minds, HAL, BDL, etc. I mean, you're seeing some pullback, Mazgaon Dock, etc. New age digital companies, they're broadly doing well. So, you know, you look at Policy Bazaar, which is PB Fintech, Nykaa, Nazara, they're all doing well, except Delivery. Delivery is down sharply, but that is largely because about 30% of the ownership lies with two entities, SoftBank and Tiger Global. And I think, you know, those shares become free to trade around the 20th of November. I think maybe tomorrow or starting on Monday. So that is Delivery, which is in focus. Stock's down about 4.5%. I guess nervousness ahead of that is a large block. And I mean, if what Tiger has done recently is anything to go by, what they did in Zomato, what they did in PB Fintech, I mean, they've been sellers on day one when the lock-in frees up. So we'll track this one as we go along. Rima, hi.
Hi, and what a week, right? This is the week where we thought we were going to get and hit those all-time high levels, but that's eluded us. But this is also the week when many of these beaten down emerging markets made a comeback. So this week, the Nifty is down about 0.5%, but Hang Seng is up 3.8%. The Taiwanese markets are up 3.5% for this week. So they made a roaring comeback. Is this just a cyclical trade for a lot of investors because these markets are down 45% from their all-time high levels? We'll wait to see. But right now, from beaten down levels, there was some buying which came through this week for a couple of these markets. Nigel, what are you tracking?
Well, you know, what's clear is that 18,450, 18,500, that's going to be a bit of a resistance zone. And we've been making this point here on Closing Bell itself. And today as well, if you look at it, you know, two strikes are very active. 18,300, 18,400 call. Big open interest built up at both these two strikes. Now, today, the day's high is around 18,400, 18,395 to be precise. And then we went down to around 18,210. That's the low of the day. But we're seeing a bit of a bounce out there. The good news is there is support at around 18,000, 18,100. And I say this because the 18,200 put that continues to see open-ended build-up. You put in, you plug in the premium out there, and that's how the 18,100 odd mark should hold out. And the 20 DMA comes in closer to around 18,000 odd. So that's a crucial zone. Holding on to that zone will be very, very important. If you can hold on to it, well, the uptrend is pretty much intact. This is par for the course. We're seeing 150, 200 point pullback. Par for the course, maybe some consolidation will not hurt anyone, because we get into expiry next week. And getting into expiry, actually, the bulls will be missing the shots in the system. because now, in fact, the markets are moving lower, but there's no shorts to cover out. So let's see how this plays out. But otherwise, that's the broad range out there. 18,100 odd on the downside, 18,450 odd on the upside. Rima?
Okay, and here's what we have for you on Closing Bell today. Stocks continue to wobble around amidst mixed global cues. Financial managed some gains, while consumer durables and autos drag. An important opinion coming in from big market voices. Mike Wilson and Nilesh Shah. Catch excerpts from our conversations later on in the show. PB Fintech and a whole bunch of PSU banks are buzzing in trade following news flow. Detailed analysis lined up on the show. And finally, we'll be joined by our Alpha Manager for the day, Anand Shah of ICICI Pru AMC, to discuss his top portfolio bets. All this and more in the next 60 minutes.
Okay, how should you position yourself, though, as we begin this last 60 minutes of trade? Mitesh Thakkar of earningswaves.com is back with us. Mitesh, good to have you back. Thanks very much. So holding for now with a 90-point cut at 18,250. What is the trade on the index, and what would you do with stocks?
Good afternoon, Prashant. I think, I've been maintaining this view that the market has kind of taken a break from the up move and is possibly either into contracting or maybe clearly a pullback. The levels which you're penciling were around 18,250 and then 18,100. We got a low of around 18,209, somewhere in the middle. Yeah, it's difficult to pinpoint the level when the first leg of decline starts or the first leg of consolidation starts. But broadly, I think 18,100 is the key level for positional traders. I think as long as you're above that, the overall structure is positive. But we need to get past 18,400, 450 to get back that momentum of making higher highs. So I think that process might take a few days and the markets might then actually settle down. Having said that, I have a buy on Birlasoft. That's a buy with a stop at about levels of 280, 279 and a target of 295 on Birlasoft. And Cipla is a sell call with a stop at about levels of 1120 for targets of 1070.
Okay, let's talk a bit about PSU banks as well. So PSU banks are outperforming today. They're up close to about 1%. Two sets of news. One, the directors can get a tenure of up to 10 years, though it has to be renewed after 5 years, though these rules don't apply to State Bank of India. But there was also a note which came out from Bank of America where they're making a case that the valuation discount that PSU banks have, even outside of State Bank of India, to private sector banks perhaps can narrow, which basically means that we've seen one leg of re-rating for PSU banks, but there could be more re-rating in store. Abhishek is joining us to get us the highlights from this report. Abhishek.
Well, Rima, as you mentioned, BOFA has written a note on PSU banks. They say that PSU banks have a turnaround, despite SBI having a turnaround over the last few quarters. So tight liquidity, sticky OPEX, that is operating expense, and benign asset quality is beneficial for PSU banks. 6 out of 12 PSU banks have delivered an ROE in excess of 14%. So ROA and ROE improvement will be there in FY24 as well as there are many tailwinds to it. So many PSU banks are likely to hit the 14 to 15% ROE levels according to BOFA. So valuation discount ex SBI has meaningful room to narrow given the fact that the multiples are at 1/3 to private banks, despite the fact that they have just 10 to 20% discount on the ROE over there. So PSU banks have more tailwinds than private banks as per BOFA given on loan growth, which will normalize around the 12 to 15% level, which is a healthy number for PSU banks, and significant room to improve the credit to deposit ratio, which could actually aid in the net interest margin improvement as well. So operating leverage is a key differential factor. Asset quality is unlikely to lag private peers going ahead. Back to you.
Okay, thank you very much for that. Prakash Diwan is joining us on the show now. Prakash, we've asked you about PSU banks before as well, and especially the ones outside of State Bank of India. But any thoughts on these, on the report by Bank of America Merrill Lynch and how the ROAs and the return ratios are set to improve from here on? Would you concur?
Good afternoon, Rima. Yeah, absolutely. I think the big change in the key matrices does involve the ROA shift, and that's something which is fairly secular. When it happened the first time in a bank like Canara Bank, probably thought this was one-off. But the way it's kind of getting to be replicated across some of the smaller banks as well, very clearly seems to indicate that this is a deep-seated trend that would probably start being very favorably visible going forward. And interestingly, what's happening is look at how PSU Bank is now positioned. They know that they are challenging themselves with market share, credit growth, which is keep pace with the private sector peers. But they've started leveraging on their branch network, on the relationship, strength that they have, the sheer numbers that are in favor. And I've started getting calls from PSU banks where I used to have accounts, which I never anticipated would happen. So the kind of data mining and all that's happening. So eventually, when the MSME segment starts growing in terms of borrowings and the credit growth comes, the shifts towards that, I think it's going to be a huge change that they can make to their size and the growth scalability. So very, very clearly, ROAs are here to stay. And we will have to kind of, all of us will have to rework our book value estimates and growth estimates basis that, which means there's still much more legs to this rally that we've seen.
Hi Prakash, good afternoon. I wanted to ask you about HUL. That stock was an underperformer actually. Then it went all the way, I think, to around 2,650 odd before cooling off. Currently, it's making a bit of an up move. What's your view on that one?
So, Nigel, interesting that you asked about this because this is going to be a trend. It was triggered by the numbers that came through from Britannia, and HUL will probably show this in the December end numbers. And what's the big change? The last 2 quarters, Q1, Q2 for them, most of these players this year has been more about cost efficiencies, control, rationalization of spends, and all of that, which they actually did to just kind of keep themselves in the reckoning in terms of being able to justify the high valuations that they always trade at. Now these benefits that they have incorporated in their functioning is actually here to stay, and it will kind of start leading to improvement in margins, which is far more substantial than what we think. For the simple reason that raw material prices have started easing off. You have the ability to probably at some point take a price hike somewhere maybe next year, and the distribution costs or the stocking up of material, of inventory that they've actually had to grapple with is making things much more efficient. So from all these counts, these vectors help you get back to those margins which you need to kind of justify premium valuations, and premium valuations will come back because at heightened levels of the index, you will need a little bit of move to safety, to the flight of capital to the safe havens like pharma and FMCG is well known. I think FMCG do offer that space, even if consumption demand is weak, but the supply side dynamics are much more favorable in margin restoration. So that's what's working for HUL. It probably happened to the likes of ITC and Dabur and a lot of the other players as well.
But I agree with you. In FMCG, I won't name a company, Rima. I was told that, again, unfair because, people will be left wondering which one is this, but I can't. But a large company, they, for the first time in 15 years, did not give out a one-time bonus, which they give out to all employees.
Okay.
So yeah, I mean, there is pressure, there is, on the demand side, supply side is also easing, so I guess that balances some out, but there is clear pressure which is coming through in the staples companies. I mean, the ones that Prakash was talking about. Any thoughts, Prakash, on some pullback that we are seeing, pullbacks rather we are seeing in all these defense names? Will they have to go down a lot more for them to become attractive, or you think one can start looking at them?
So, Prashant, interestingly, what's happening is defense as a theme or as a sector is kind of getting much more broadly accepted. I mean, the narrative is right now chasing the price rather than the other way around. And when the smart investors started buying into these stocks way back, let's say 6 months or 12 months earlier, the valuations were very comfortable. Now, the beauty about some of these stocks is that you will want to be in that. They are the DMarts of the world. So an HL, for example, or a Mascon Dock, you cannot stay out of it if you want to have exposure to the defense names, because that's where the growth is very clearly being visible. The kind of guidance that is being revised upwards, the visibility that's coming for the likes of HL and all is fantastic. So I think what's happening is finally the price is justifying the narrative that's building around, and there's a huge participation on the retail side that's coming in. So I think they're going to get into that stage where they will be overvalued. by the sheer demand impulse which is there for this paper. People are forgetting the fact that there are a lot of these private sector names, while you have this whole bunch of very promising PSU-led defense play. The private sector names which are also making a lot of headway into defense. So case in point is Bharat Forge. Very clearly, I think it's like a company that's completely reset itself from an automobile ancillary major globally to a railway come defense play. And the defense play is only going to keep on getting much more sharper as the years go along. So I think that's where people need to look at and not just get carried away by momentum in some of the defense PSUs. I'm not saying they don't have promise, but I said they'll be good at a price, and probably that price is still some time away.
Stay on, Prakash. By the way, Brent crude has slipped further. We're now at $89.5 per barrel for Brent crude. In the morning, we were above 90. So despite the weakness in Brent crude, which is positive for India's economy as well as markets, the markets have taken a turn for the worse. It's clearly a down day, down close to about 0.5%. Get into a break. We'll come back and talk all things market. Anand Shah of ICICI Prudential AMC will also be joining in.
Welcome back. Well, some bit of a recovery is what we've seen from the lows of the day. So we're off 50 points in the day's low, which is pretty good news. But one stock that's moved to the high point of the day as we speak is NMDC. And that one, in fact, has done pretty well in trade. Remember, just yesterday we told you news that NMDC has gone ahead and cut prices for the first time since August. Now, today, the key reason the stock is moving up is because Kotak, they've come out with a note and they've upgraded the stock to buy with a target price of around 130 rupees. They take into a consideration that, yes, there was a price cut that was announced yesterday, but that's an attempt to revive volumes for the second half of the year. Both the domestic as well as seaborne iron ore prices, they believe, has bottomed out, and things will look up for the next 6 to around 12 months. They also add that there's a strong case for NMDC to re-rate from here, post that demerger of the steel plant, because that one was draining a lot of cash. So, now capital allocation will be improved, the free cash flow generation will be even better. And finally, they state that if the company is going to make a lot more money, then there's a strong case for them to give out higher dividend yield as well. So put these factors together, Kotak is positive on NMDC. Prakash, that's what Kotak has to say. And I reached out to a couple of steel players and they indicated that the iron ore offtake isn't that great. For me, that's a little bit worrying, but let's see how things pan out. Maybe it's a one-off, or maybe there's one large producer who's not functioning at optimum levels. But how would you view this stock, NMDC at around 110 rupees? The last quarter's numbers were very, very disappointing.
So, Nigel, I wouldn't be surprised if it probably needs more time to come back to a run rate which is fairly impressive and which can justify a decent uptick in the stock price at least. Because on the ground, you are very right. Not only iron ore demand, but also if you see on the other side, the secondary steel demand itself is really not very impressive. In fact, the prices have been softening post-Diwali, and this is, mind you, a quarter where things actually look up in terms of construction activity and all. The only hope, my sense is towards early next year, calendar 23, you'll probably see a lot of infrastructure push by the government getting geared up for the election year of 2024. And that build-up is something which could probably come to the rescue of steel producers. And if secondary steel prices improve, then you have the primary prices and of course the iron ore uptick also coming through. So till then, it's probably going to be in the value zone. But you know what? I think if the environment is still not very optimistically, they say favorable, I don't see any reason why you would want to buy into a stock when it very clearly can give you a 10, 15, 20% downside also, and that makes your risk reward even better at those zones. So wait for that. Is my view. Of course, it could differ. People like the business from a longer-term perspective, but the entry point is important, according to me, and that would be some time away from where it is today.
Nykaa is up close to about 5% in trade. Early in the morning, remember, there was a big block deal in which TPG sold more than 5 crore shares, totally valued at more than 1,000 crore rupees. So despite the selling pressure, Nykaa has inched up. One, the deal took place at a price of 184.5, so at a very marginal discount to where the stock was had closed yesterday. Secondly, The sale by TPG today, coupled with the 1.1 crore shares that it sold on 11th of November, perhaps means it's a clean out trade by TPG. They do not have more shares, which could hit the market. And thirdly, in a block deal which took place yesterday, Canadian Pension Plan Investment also bought 1.7 crore shares. So some marquee investors are exiting post the lock-in, but many of them are entering in as well. So Nykaa has inched to the high point of the day, up close to about 5%. Prakash, I wanted to get your thoughts in on the aviation sector. There is talk about how the Tatas are looking to merge all the 4 airlines that they own into one. And the big one is going to be Vistara as well as Air India. Does it mean anything from a listed stock market point of view, the Interglobe Aviations and SpiceJet, this merging of brands?
So, Nima, that's an interesting space given the kind of tectonic shifts that are happening. And I can tell you, if you fly Air Asia or a Vistara, you will see a very clear, and of course Air India, you'll see a very clear demonstration of change that's happening very rapidly, especially a common thread like the Tata New Pass being almost like an equivalent of a frequent flyer program for some of these airlines which didn't have all that. So, there's this whole underlying effort to unify a lot of the operational parts, which components of the business, which make it very synergistic and hence efficient and hence profitable. So that's going to happen, but that's work in progress. The immediate impact for all of this when a stronger player like Air India plus Vistara plus Air Asia comes out is that a weaker player like Spice will have to be nudged out. My worry is that you'll have Spice struggling and you'll have a go first, which probably will be now go last from that perspective, though it's not listed. But I think it's difficult for it to get listed anymore. And the beneficiary could probably be Indigo. So interesting space, you can take your pick. But my money would, at the moment, be on Indigo for some more time till it comes back into the reckoning with leadership on market share and profitability as we see in the next couple of months, especially given the fact that the festive season is going up very well for them on pricing. So interesting times, but the Tata, conglomerate of airlines would probably take some time to get ready to battle out. Till then, you'll probably see Indigo benefit in the short term.
Okay, all right. Prakash, thank you very much. Great speaking with you. Appreciate you joining in with all of that perspective. Have a good weekend and hope to see you back soon next week. Thank you. Anand Shah is head of PMS and AIF investments at ICICI Pru Asset Management Company. He's joining us now to take some questions. Anand, good to have you with us here. Thank you very much. Since you have a longer-term time view as well, but I was more interested to begin with, at least in the slightly nearer to medium term. Are things looking a little overdone, overcooked, Anand? I mean, just looking at what the markets have been doing or not being able to do, so close to new highs, but faltering, or you won't read too much into it. Any thoughts?
Hi, very good afternoon to all of you at studio as well as to the viewers. I think you're right, and yeah, that's a common observation, but you have to see it relatively. Relatively, if you ask me, India is still a shining star in that sense, and there are a couple of reasons for that. I think not only that India had not overspent during the COVID crisis, so our fiscal deficits and our forex reserves were still within benign limits, and to that extent, that's been helping today, where we have been able to push for some growth at this point of time. Similarly, China plus one leading to some uptick in manufacturing more recently with high energy prices in Europe is also helping shift some bit of manufacturing from a high cost Europe towards India has a lot of coal reserves, and our energy prices are relatively more benign today compared to what we are seeing in Europe. And to that extent, that's also helping. So the sentiments are positive for India,
right,
while fundamentally, still on the earnings front, things have softened in this Q2 than what it was till the last one.
So tactically, just tactically, I mean, all of the relative points all hold very true as you outlined, but tactically in the near term, could we run into a bit of rough weather, in your opinion?
No, again, as I said, there are two legs to the markets. There is earnings, which is we can sort of predict, and we can say, yeah, that's struggling a bit here. till the Europe recovers, till the US, we have some clarity on where is the growth for US is still tapering off, going into recession. So yeah, we can predict to some extent that earnings would not be as benign as it was till last quarter. It's a bit of challenged, but within that, you have banks who are doing very well, manufacturing still chugging along. The part which we are, which is still in a dilemma, which is where the PE multiples are going, and very clearly there, a big lever would be coming in from the global markets. What's happening in US, whether we've seen the peak of interest rates, have we seen the most hawkishness that we can have from the US Fed, and that's something which can continue to drive the markets up. So I know markets will always be calling the markets in the short term will be tricky, and it's no different this time. But nevertheless, we are more bottom up when it comes to approaching the markets at this point of time. And there, very clearly, our overweight positions are towards more banking, where the earnings still remains robust, bit of manufacturing, bit of mining, where again, we have seen a very long-term underinvestment. So outside China, there has been underinvestment in manufacturing, mining. That's also looking up structurally rather than cyclically. Cyclically, yeah, it can be a little soft here and there, but structurally, I believe that's an opportunity.
All right. Hi, Anand. Good afternoon. Nigel on this side. Anand, you're making that point about mining, and we had some flashes that were up for our viewers on the screen. That the Steel Minister, Mr. Scindia, he's written to the Finance Ministry. He's given them a presentation, and he's requesting that to roll back this export duty that has been levied, both on pellets as well as on finished steel as well. And keep in mind that in May itself of this year, they'd imposed these export duty to the tune of around 15 to around 45%. I'm looking at your contra fund, and I believe that you're positive on Tata Steel. Give us a rationale out there. You believe that the ferrous cycle could still look up from here?
So I think, as I was speaking just now, outside China, there has been a sort of underinvestment in manufacturing in general. Even if you see last decade and a half, most of the incremental steel capacities have come in there. But things are changing there, particularly from a trend perspective. We are seeing lower steel production in China. We are seeing China focusing less on commodity manufacturing and focusing more on value-added manufacturing. Rightly so, given that it's a far more prosperous country today than what it was a decade back or 1.5 decades back. So what we are seeing, there's a window of opportunity where, in pockets of manufacturing where India has a right to win, and definitely metals is where we have enormous reserves, both on the iron ore as well as on the bauxite side. So I think those are the opportunities where India has a right to win. Again, macro-wise, we have opportunity to win. A very large competitor is scaling down its production structurally as it focuses more on pollution in their own country. So I think from that perspective, we've been not positive today, but been positive on metal sector for a while now in our portfolios.
Anand, GE Shipping is one of your bets, and I think you have close to about a 5% weightage in GE Shipping. The numbers were very good. I think highest ever profits. The company turned debt-free as well in the quarter gone by. But the stock has done phenomenally well. It's doubled this year itself. So at a time when many of the stocks have struggled, GE Shipping is up 100%. Could you talk about the industry dynamics which support GE Shipping to continue to do well after this kind of outperformance?
Yeah, so I can't really talk on the stock specific, but definitely you spoke about the industry trends, and there. While the container freight rates are coming off, and that's been saving grace for many of manufacturing industries in this country, which was reeling under a high freight rates on the container side. But the areas like crude tankers, product tankers, areas like dry bulk, those are the areas where we are seeing still a stronger demand situation. There has been a movement in the area in which the crude is moving. Previously, the crude was moving from Russia, Europe. Now it's moving from Russia all the way up to Asia. So there has been an additional ton-mile requirement when it comes to the crude tankers and the product tankers. And that's where we are seeing significant improvement in the overall finances for the players which are operating in those areas, and that's what's been helping this sector for a while. You have to mind you, this is not a phenomena which this has been a very long, dry run for the operators operating in crude tankers and product tankers, where we had almost a decade when the profitability was below par. It's coming out of a very long bearish zone, and it's entering a zone where incremental demand is strong, whereas the supply is limited.
Right, no, absolutely. I mean, it was a dog of a stock, Rima, right, for the longest
He
time.
said a decade of underperformance and I think negative growth, right? Or losses for companies like GE Shipping.
Typical, right? I mean, you never know when
the cycle turns.
When the cycle turns, and extremely cyclical as a business as well. But I think the last big year was 2008. Actually, 2007 and 2008 were very large years in terms of price moves, and then you've got to come to 2022 and what it has done.
But in the first leg of the up move, there are so many skeptics. There is always disbelief because you have, your history of the last 10 years with you saying, oh, I think this is a stock which you should ignore, but look at the way it's run up.
It reminds me of, I don't know if you've spoken about, Vardhaman is another one of Anand's picks, but it reminds me of Gokuldas, right? Gokuldas, I think the last high was again 2007, 2008, did nothing. And then from the COVID lows, it made a move which basically stopped at previous all-time highs, right? So very, very difficult, impossible to time these things. When stocks will do well, you can bet on a story, but timing is impossible. Anand, any thoughts on things like PB Fintech, which are seeing large moves higher? We'll have our research analyst join us with more details on the latest there. But since we have you, any views there?
So I think these are the emerging industries in that sense. They have been also in a way disruptors. They don't have a very long history. So we've been shifting from industry which has a very long history and a strong cash flows to industry which are emerging industries and have very little cash flows to talk about. So they're very different. To be very honest, we've been skeptical on overall space, where we believed that the valuations at which these companies were the expectations were very high from them in terms of growth, in terms of turnarounds and profitability. And rightly so, we've been stayed away from this sector. But having said that, the corrections have been sharp. There will be a couple of those businesses which make sense, have a right to win. Not all of them have a right to win. Some of them will have a right to win. Some of them will also see light of the day when you will have cash flows to back the current valuations. So yes, we are continuously evaluating these businesses. And they will also at some point of time stabilize. So some of them are still having evolving business models. So, it's very difficult to speak generally about these companies. We've been evaluating each one of them. We have a strong research team working on that. And at some point of time, we'll have a view on those names. But today, we've been happily avoiding that sector for the time being.
Okay, Anand, always good hearing your thoughts. Thanks so much for stopping by. Wishing you a good Friday evening and a pleasant weekend as well ahead. By the way, the bulls are putting in a bit of a fight. They don't want to go home closer to around 18,200. It seems they have a date closer to around 18,300. And I say that because a few of these stocks, Reliance Industries has come off the low point of the day. Pull up the intraday chart, that'll tell you a better story. You have ICICI Bank as well that's cut its losses, so that as well has moved up. And HUL, we highlighted that one. Well, that as well is pulling back a little bit from the day's low. So good pullback is what we're seeing. The Nifty Bank on the verge of moving into the green. Let's see how the final 30 minutes goes. For the time being, slip into a short break. Come back. We'll focus on dealing rules. Nimesh will be joining in to tell us what he's picking up in terms of D-Street chatter. Our technical guest as well will be back with us.
Welcome back. There's been a recovery in the markets, 18,300 plus now as we speak. HUL has been one of the big contributors to the up move. The stock has gained more than 1%. SBI is at the high point. A couple of technology names like Tech Mahindra and HCL Tech 2 have inched higher in trade. Dipan Mehta is joining us on the show. Dipan, wanted to get your thoughts in on mid-cap IT and particularly on a stock like Emphasis. Now, just yesterday I had a chat with Nitin Rakesh, the CEO and MD of the company, and he's betting very big on M&A to bolster the company's growth. He said that we've hired an M&A head just a couple of weeks ago, and he's looking at making some big acquisitions which could contribute even 5 to 10% to the company's upside, to the company's top line. You know, so earlier we used to see acquisitions where the companies wanted to focus a lot on capabilities and not necessarily capacity or top line. But do you think this could be the start of a new trend that when growth is slowing down for the industry, the companies may look to utilize the cash on their books and make some big acquisitions because valuations too have become a bit reasonable with the carnage that we've seen in global technology names? Your thoughts?
Yeah, good afternoon and thanks for having me on your show. And I did see the interview. But you know, these M&A activity is always fraught with risk. And that is not as simple as it appears. And sometimes the kind of benefits do not accrue, and the margins which the company expects or the client mining which may actually take place may not actually work out. And you can look at Wipro as an example. Prior to them getting the last CEO, who's currently the CEO, he had done several acquisitions and yet the performance was going nowhere. It is just that when they ramped up their sales and marketing efforts and started winning those large contract values, that we saw Wipro reporting numbers in line with the industry standards. So I wouldn't bet too much on M&A activity. I think sensible management should stick to knitting, and they can easily hire employees or specialists for whatever vertical they want to enter into. End of the day, when it comes to software, if you're in the large cap software companies, you have to wait out this uncertain period, which may be there for 6 to 12 months, and wait for the headwinds to recede. In the meantime, I think mid-cap, specialty mid-cap software companies are doing pretty much all right, like Persistent, Tata Elxsi, KPIT, and then there are some specialist companies like Coforge, which have reported exceptional numbers. And I think the merged entity of LTI and also Mindtree, I think that would be an interesting investment opportunity. So you have to be a bit selective when it comes to software companies, but just because valuations are down, expecting them to do M&A activity to grow their business, I don't think that may actually work out or play out the way the managements or investors may be expecting.
Okay, fair enough. You know, there's a sharp recovery which we'll come to in a bit more detail. Just 28 points lower. Dipan, hi, afternoon. Just coming back to you, but here's an interesting story. So the steel industry and the steel ministers shared a detailed representation to Finance Ministry to asking them to reduce or roll back the export duties. Timsy is here for a brief update. Timsy, hi, afternoon.
Well, this is the second meeting of Minister Scindia itself. And to be precise, when it comes to the industry representation coming to Finance Ministry, this is the third time since May that the industry has made a representation to Finance Ministry seeking a cut, a reduction or a rollback, a complete rollback of the export duties that were announced in May. To be precise, around 22nd May is when these duties were announced, and these export duties were levied from 15% to 45% on inputs of iron and steel. And that is exactly what the steel industry has been pitching to the government, that they need a rollback or a reduction at least to give themselves a breather. And to be precise, Scindia met Finance Minister on 16th of November. This was a day after Scindia took a detailed deliberation with state-level steel ministers on issues related to mining of raw material growth and future challenges of the steel sector. When it comes to what happened inside the meeting, well, sources say that FM has received the representation yet again and has this time asked specifically Revenue Department to take a closer look and reassess the matter. FM has assured Scindia for a closer look, a deeper look, and look into challenges. And yes, let's see how soon a decision is likely to come. We hear that decision is likely to come up soon, but how soon is something that we'll have to wait and watch for, because this is pre-budget time as well. So any decision now taken normally, Finance Ministry's view is that they should accommodate it in budget and not announce it before that. But let's see how the pressure of steel sector actually works on finance ministry, whether they decided to hold this rollback or cut till budget, or they come up with a decision even before that.
Okay, thanks a lot for that, Timsi. So the steel ministry is making a pitch. Let's see whether or not the finance ministry gives some relief. And will the relief come soon, or will it be kept for the budget 2023? That's what we'll wait by for. Timsi will keep us updated on this front. But from the old age economy, let's talk about the new age themes. PB Fintech, that's surging away in trade on the back of bullish commentary that's come in. Vivek joins us to run us through all of that. Vivek.
Well, that's right. So after a long time, you're actually seeing the stock do quite well. And what's actually changed is that, you've actually seen brokerages turn quite bullish on this name after a while. So what happened is Morgan Stanley at its recent conference hosted both the chairman and CEO and the co-founder. And, here are the key takeaways, that they've actually highlighted in a note to their clients. So what they're saying is that they've, number one, reiterated their overweight stance with the target price at close to 620. They're saying that the company reiterated its profit guidance of 1,000 crore as far as FY27 is concerned, and also has said that adjusted EBITDA break-even would be in fourth quarter of FY23. Management also highlighted a lesser-known point that the cash losses that it is at currently are already near the zero levels. Not only that, in a couple of days ago, CLSA also initiated coverage on the stock with a buy rating. And what they are saying is that PB Fintech is actually a key beneficiary of the growing share of the online insurance distribution. And they believe that the company has a robust take rate of 15% in the insurance business. So both CLSA as well as Morgan Stanley turning bullish as far as PB Fintech is concerned.
Okay, all right. Thanks a lot for that, Vivek. Deepan, what do you make of it? Out of nowhere, this one's come back on the list, and brokerages are getting quite optimistic about it. Your take?
Nigel, I'm also positive on PB Fintech. It's an outstanding business. It's just that maybe valuations are, of course, a bit confusing and got listed at a valuation which perhaps it should not have. But underlying business fundamentals are great. Insurance industry is going to grow gradually. I think at least double-digit growth rates will be there. And you can expect PB Fintech to grow at double that rate. It's got a superb technology platform, which is unparalleled. And eventually, I think, as you just said, that as and when more and more online transactions take place in terms of insurance booking, this is one major beneficiary. And I think with all the feedback that these companies are getting, they are looking at getting into profitability. Not just PB Fintech, but all the new age digital companies are now talking in terms of how and when they will get into the black. And I think that's positive news for their shareholders. I would say that if you want an exposure to insurance sector per se, then this is quite an interesting bet. But it's not for the faint-hearted. You can expect a lot of volatility in the stock price as well as the earnings. And that's something you have to live with till the time it becomes like a more mature business and providing secular growth rates. But that's something at least 3-4 years away.
Absolutely. Just a few stocks, Deepan, which have contributed the bulk to this sharp rise. So let's have these intradays. HUL, you'll be able to see the sharp spike since in the last 30 minutes or so. HUL has moved up from the lows of 25.54 to 24.83. HCL Tech has seen a very sharp spike. That is, again, from 1,085 levels to about 1,100 levels. That's a sharp spike. ICICI Bank, Asian Paints, beg your pardon, before that. Asian Paints, sharp spike again. ICICI Bank after that, which has seen a sharp move up. I mean, on the day, these are not very significant changes, but from the low point, this all amounts to about 1.25% kind of moves. TCS is another one, which has seen a sharp spike up, almost a 1% spike in the last 30 minutes or so. There you go. And there is Reliance, which has moved about, 15 rupees or so. From 25.80, which was the low, stocks at about 25.95. So it should be 2,600 now. Actually, it's moved up a little bit more. And this is what is helping markets recover. 26 points lower is what you have on the Nifty. Mitesh is also with us with BTST Trades. Mitesh, I mean, it's possible that the market, it does the most natural thing in the most uncommon way, as they say, the old saying. So everybody's been waiting for new highs. Everybody just throws in the towel and saying, well, it's not going to happen in this leg, and then bam, the new high comes at some point. Do you think that's what's going to happen here?
As of now, Prashant, I think, I'm not sure that it will happen immediately. Eventually, it will happen because the overall, the weekly and the monthly charts are very positive. But I think in the short term, it looks like that 18,450 to about 18,200 could be the consolidation zone. So next couple of days, it will be basically quiet, though I think the recovery is very impressive from the lows of the day. But I think overall, there is clearly lack of strength on an immediate basis to get past 18,450, which means that few more days consolidation, you will see the markets cool off from overbought levels, and then I think, make an attempt. Having said that, Birla stock is something which is a BTST that's reversing nicely. That's a BTST with a stop at 282 for targets of 292. And Cipla is something which has kind of broken down. So that's an STVT with a stop at about levels of 1108 for targets of around 1085.
Okay, all right. Thanks a lot for that, Mitesh. Well, Nimesh is with us. You'll have been waiting by. We're a little delayed today, but Nimesh, tell us, what are you picking up in terms of dealing room action on this Friday?
Well, Nigel, it looks like it's a day of consolidation. In fact, it was a week of consolidation. If you look at Nifty and the sensex for the week, it's pretty much flat. Hardly any returns on that. So it looks like that's before we reached the all-time highs. A week of consolidation, so to speak. So that's playing out this week. Even the participation has lowered down a bit. So if you look at FIs, if you look at the DI participation, that's been quite lower this week. So there is lack of participation as well from the larger institutions, and that's been the trend today as well. I guess broader market theme, there is a bit of profit booking in the broader markets. That's been the consistent feedback for the last 3 days, and that's been the trend today as well. So there is a bit of fatigue now in the broader market in terms of participation as well. In today's trade, I guess two things stand out. One, a small bit of nibbling in the technology stocks from the larger FIs. So that stands out in terms of flows. And within financials, again, there is a mix in terms of flows. And the PSU bank index is up 100%, and that's relatively outperforming. But there is interest still there within the financial names by the larger institutions. So a week of consolidation, lack of participation from the larger institutions, but looks like we are poised for some bit of pause before we hit the new all-time highs of 18,600 and above. In the following weeks.
Which could be healthy as well, right?
Could be healthy as well.
After the kind of run that we have seen, some bit of a pause will be par for the course. And the point you made on the technology names, the IT index, if I look at it in the last 30 minutes, that's moved to the high point of the day. So there is some nibbling out there. Yeah. But individual stocks, what are you picking up, Nimesh?
Okay, so in terms of individual names, the first stock is PB Fintech. You all discussed as well. Morgan Stanley and a couple of brokerages are bullish on this particular stock. But the market feedback is now at these levels, some bit of HNI interest is back. In the last 2 days, I believe some smart HNI investors have bought at lower levels into PB Fintech. So at some valuations, there is a bit of interest back in this particular stock, and it's a big up move in today's trade. So that's the first one. The second stock is Bharti Patlipeda, which is Bharti PP. Normally, we don't see too much of volumes on that stock. It's come into my charter list for the first time because now at these levels, there is a bit of institutional interest back in this particular stock. So that is something to track going forward, which is Bharti PP, the Bharti Patlipeda. The other two stocks are Tata Steel and SBI Card. Both are, Tata Steel has recovered after the CNBC break, but both these stocks have chosen largely because there is selling pressure from the large institutions in both these stocks. So Tata Steel also, as well as in SBI Card in today's trade. And the last stock is Paytm. We saw what happened yesterday after the big block deal. So Paytm has seen some bit of recovery now. Hardly 1% up. But now at these levels, some bit of HNI interest is back. I believe some smart HNIs have started nibbling this particular stock at lower levels. So, the bigger theme is within those platform companies at lower levels, what we saw in Zomato at 40, what we are seeing now in PB Fintech, some bit of interest is back in Paytm as well, is what I understand from sources.
Okay, all right. Thanks a lot for that. Nimesh, well, for the time being, though, we'll slip into that short break, come back, final 10 minutes of action. Stay tuned to us. Welcome back. Final few minutes of trade. We saw a bit of a recovery, though Nifty couldn't move into the green because it's being met with some selling pressure at higher levels. But one stock, Delivery, it will definitely be in focus for next week. That lock-in opens up. And because of that, we could see some supply that's coming in there, like we've seen with the other few companies. Dipan, what's your view on this one? Valuation-wise, it was expensive. It's come off a good deal from the recent peak. There's going to be a lot of supply. Will you be interested?
Yeah, you could expect a further correction in Delivery, and the last quarter numbers also were slightly disappointing. The issue here is that Delivery has built a superb platform for express delivery, and clearly it's a great play on the e-commerce, rising e-commerce sales which are taking place within the country. But at present, the operating costs are so high. So unless we see a surge in the revenues and the company goes beyond the break-even point, I don't think it'll start making profits. And that exact break-even point also is a bit uncertain. So for the time being, I think it's best to avoid delivery. And I think existing investors, I think correctly said they are stuck in the stock. Or maybe you could look at a rally to get out of the stock. But I think next few trading sessions could be quite trying for delivery per se, as we have seen some of the other new age digital companies where massive selling has taken place and prices have corrected post ending of the lock-in period.
And it's not the overall market environment as well, right? Because some of these individual investors, SoftBank, for example, we've all been reading troubles right at the top at SoftBank, right? Tiger has been selling on day one when their investee company lock-ins open. We saw that in Zomato, in Policy Bazaar. So yeah, I mean those are issues which one will have to deal with. But at some point, now that point, of course, is the art and science of it, right? Things will start to look better, will look attractive, or enough damage would have been done. Are we at that point in any of these names? PB Fintech, for example, is up, in a large way today.
Prashant, you know about that point after these stocks have created a bottom and they rallied 15-20% from there. And then you have strong numbers coming through and there's a clear-cut roadmap as to what the profits are. There is no denying the fact that all of these companies, including delivery, are great, outstanding businesses. They are run by very aggressive managements, which are highly ambitious, and they want to scale up as they have and keep the momentum going. The real problem is valuation. And one way to work around them is to remain invested for a long period of time, like 5-7 years or so, and maybe some amount of valuation over-exaggeration, overpaying of these stocks may get neutralized. But unless we're able to start to value these companies on traditional matrices like price to earnings, price to book, or EV to EBITDA, unless you don't have those numbers coming in somewhere in line with comparable businesses which are having similar growth rates, it'll be very difficult to predict what kind of returns these companies can generate. But I've always maintained that over the next 5-10 year period, one of the multi-baggers will be coming from either of these new age digital companies or the ones which are going to get listed. And this is clearly the future of India. It's not there in steel, cement, or FMCG stocks. I think it's going to be these new age digital businesses. It's just that you have to be patient with their business model and present valuations.
Okay, all right. We'll leave it there, Deepan. Have a good weekend. I don't know if are you a football man? Are you going to be following the World Cup?
No, not really. But I'm looking forward to India, New Zealand, actually.
Well said. Thank you very much, Deepan. Have a good weekend. We'll see you back next week. Appreciate it. Well, I think let's just start closing out the session. And a very smart recovery, I have to say. Not quite into the green, but, can't take away from the fact that it was a sharp one. So, and banks, by the way, are, contributed in a big way because you had names like ICICI Bank and HDFC Limited, which pulled up quite a bit. And along with that, you had names like TCS and HCL Tech, which also sort of pulled up quite nicely in the last 45 minutes to 1 hour trade. There were names like Reliance also, which contributed to this uptick that we saw. I mean, actually, if you wanted to identify one group of stocks which did well, it's the PSU banks once again. Across the board, top gainers, of course, were Union Bank, etc. But the index ended higher and did better than most others. Autos is one area of disappointment. And I think there was some selling pressure towards the end. So Mahindra & Mahindra, Bajaj, Eicher, Maruti, all nifty names, by the way, they all ended pretty much the low points of the day, 1 to 1.25%. I mean, not a very meaningful close one way or the other. We'll end down about, 35-40 points at about 18,300 levels. Broader markets, Rima.
Underperforming, mid-cap index down 0.5%. For the week, it's down 1.5%. Today's selling pressure coming through in defense names. Mazgaon Docks 6.5% lower. Cochin Shipyard down in the last 10 minutes of trade. Glenmark Pharma under pressure. That's lost close to about 5% in trade. Campus Active continues to lose ground. Hutco weak in trade. On the gaining side, PB Fintech was higher in trade. Nykaa, despite the selling pressure. Archie's up 44% this week. Indiabulls Real Estate too spiking up along with that. Piramal Pharma also on the gainers list by the close. Nigel?
Well, that's right. So we wind down the week with the Nifty moving absolutely nowhere. We're down close to around 0.3% for the week. We moved in that band of around 18,200 to around 18,450 odd. The breadth of the market, though, that was under some pressure. The mid-cap and the small-cap indices, well, they were lagging. for this week. Well, on that note, we'll wrap up with the market action and closing bell. But you stay with us. Smart Money comes up next.